Welcome, everybody. We have a rather packed agenda this evening. I want to, first thing is to modify the agenda to move item 3, transfers, up to item number 1.
So moved.
Second. Any discussion? All those in favor, say aye.
Aye.
Okay. In your package, there was a memo with respect to school safety at town and school measures. There was also something on Dewey Farm cleanup and public safety grants. So the first item I want to address, obviously, is the school safety request that was outlined in Tom Cook's memo to Mary Ann Harris on February 12th. 3 items in there that the board members have had a chance to see. The first one was a motion to recommend that this was coming from the Board of Selectmen, which was approved at the Board of Selectmen meeting. Motion to recommend that the Board of Finance approve a supplemental appropriation request from the Board of Education for installation of classroom doors, locks, and hardware in the amount not to exceed $177,000. This is a supplemental funding, and it's for the purchase and installation of 277 classroom locks and hardware for 6 of the board's 7 school buildings. Mr. Burke is here to, Burke Leclerc is here to talk a little bit about that if the board members have questions, but we did discuss this at a prior board member and said, just bring forward a motion and we'll take action on it.
I'd like to make a motion that we approve.
Second.
Number 1.
Okay. Any further discussion?
No.
Okay.
Well,
okay. Go ahead. Sorry.
is this coming out of reserves, the 809C? Is that the?
Yes.
And we have how much? We got plenty of room.
Spent $1,092 out of it, so it's
Okay.
So we got plenty of room in there.
85, yeah, 360.
Burke, I do have a question, not to belabor it, but once this is approved, when would you be able to start?
The bid specs Steve has been working with the vendor have been written. I have not seen the back end. He's going to be giving those to me.
Okay.
We've been in touch with our security vendor also to do with a consultant just to confirm the type of lock. So he's given his blessing to that. We'd go out to bid and make sure that the
Right. And you did have, as part of this attachment, a detailed list of the various schools and the classrooms, the modular doors, and the choral room that would get the locks, correct?
yes, all those that you see in that attachment there, that is exactly where they would be added.
Okay, great. Okay, all those in favor of any further discussion?
Well, apropos Peter's question, do we have to identify the source of the funds in the motion?
Yeah, why don't you amend your motion to identify the source?
From the 909C.
The
809C, that's right.
Charter Section 809C.
809C.
I need to amend my second. So
Okay.
done. So
Any
done.
further discussion? All those in favor say aye.
Aye.
Okay. Motion passes unanimously. Okay, the second item is a motion to recommend that the Board of Finance approve a supplemental appropriation requested by the town of Simsbury to cover the cost of short-term security recommendations.
So move that that motion be made with the appropriation coming from Charter Section 809C.
Okay.
We need to include in an amount not to exceed
Right.
77.6.
Right, that's what,
I thought it was 25,000.
no, that's the
the third
second
one.
one.
That's the
Which, actually, I was going to, I recognize you made a motion, but I had a comment on that. It doesn't have a dollar amount,
No.
okay? So I feel we're not going to be able to give an open-ended item. What I'd like to do first is, and I really think these are kind of backwards, I think this third motion here is more appropriate, which is really a comprehensive security audit study.
So Paul, the way the motion that is requested, well, I guess that's in the description in that second line, but it does say in the amount attached, and the attached exhibit shows it's 77,600. is what they're seeking.
Okay.
It's in the last page.
Yes, actually, I
How
did
can
see
you
that.
know what
right.
to seek before you have an audit?
I get you.
Right, that's my question.
Well,
We can
okay.
discuss it, or we need to.
You can see the list of what it's for. There's an itemization of the 77.6.
Right.
Yeah, I wonder why you need the 25,000 further study is all, right?
Do you want to address the first one first? The
Well,
third
do you,
one?
okay, well,
I'll withdraw my motion.
just
for
from,
that.
yeah, why don't you withdraw your motion,
It's
okay?
easiest.
And then we can have a discussion on it. You know, I'm comfortable with the third one, which is the study, although I think the source of funds should actually come out of the Board of Selectmen budget just as a transfer. But the further security, again, how do you know what to do if you haven't had a study?
So can I just ask, was item 3 limited to, because it says townwide comprehensive study, was that going to include the school systems for 25,000?
No, it's just
Oh, it
town.
reads like
Just
it's
the
townwide.
Has the school
Okay.
done one?
We just have selected the audit firm, your PM consultants. They'll be starting for us. We worked with the police department, with Roy, and, you know, shared our scope of services. Our timeframe was a little bit sooner, so my understanding that they will be able to select a firm
Okay.
and are not as pressed.
Can I ask how much it cost you?
It's $39,000.
Thanks.
Where are you getting the funds from?
Various operating budget sources.
He's got-
Identified several line items.
So like a consulting budget or some other
Right, we have
things?
some
So it's out of your current
consulting funds
budget,
and some other
I'm not here tonight?
building related funds.
Is Tom Boyd not here tonight? Because I'm just thinking on
Yeah, I
what he
believe
has
so.
submitted. I mean, I think my assumption,
He did submit some
I
stuff.
have that, but it strikes me that I wish you were here, that this is what's required to get to kind of a minimally comfortable standard within the study, would take it further to see if with that, we've done all the right things. Because if you look at some of what's recommended, it's pretty standard stuff that you would expect. But is there anybody who's going to talk to that tonight?
Well, my issue with his memo, not issue, comment was, these are very specific requests in amounts that aren't all that overwhelming. The Board of Selectmen could actually do these as soon as they wanted to and do transfers or take them right out of their budgets. I mean, take, for example, Town Hall, Police, and Board of Ed. You know, $10,000 for upgrade the keypad system, $3,500 for a panic alarms, additional camera, $2,800. Those aren't amounts that couldn't come out of existing budgets. The Board of Selectmen had a $400,000 turnback last year. So, you know, I'm kind of thinking that maybe that's where they should come from and just do it right away.
And then we wouldn't have to approve it.
Well, we have to approve a transfer. We can approve this from a transfer item to determine what. So then we
They
approve it.
voted, right?
We don't hold it up.
Right.
So if they want to pull it out of current, the study.
Do them as transfer. The study, I mean,
Yeah, so we can just, as an open-ended transfer, they pick the account they want to transfer it out of the 12-13 budget, then you approve it.
Right.
We don't hold it up, then they decide where they want to take it, and then they move on.
Well, it's not what they've requested.
That's true. But they could then, right.
I'm just careful of reserves, you know, because we found out, you know, we have to really hold our powder dry on reserves, where I'd rather just see these come out of the operating budgets as transfers.
I understand what you'd like to do, but that's not what they've asked for.
I know. But we could send it back to them and say, go ahead and do it, just send it back with which accounts you're taking it out of.
Well, okay, I guess I have a philosophical question there, Paul, and
Sure, go
it may in fact put us at a little bit at odds, but why would we treat the town any different than we treated the Board of Ed? We've just agreed to a transfer from reserves for the Board of Ed, and they're 70% of the budget, and here we are, the selectmen is 30% of the budget, requesting $102,600 altogether. I think that's That's a bigger burden on their operating budget than if we said to Burke,
Okay.
take 177 out of your operating budget.
I asked
Sure,
I
go
asked
ahead.
myself the same question. But I started looking at some of this, and like Performing Arts Center, security cameras, it's not the same concept of a safety issue. I think the Board of Ed's been putting cameras in for a long time through their budgets. I mean, the town has chosen not to. So they've been keeping up with this. If it's a true safety issue, I can't say no to safety, and I don't think we're saying no to anything. It's just where it's funded from. So if we need a panic alarm or special doors, I mean, in the school, it's a pure safety issue, because in light of what happened, at least they have some defense. They can lock the door now. In the past, they couldn't. Security cameras at the Performing Arts Center, I don't know if that's a safety issue.
There's somebody there all the time now, we know that, working. And that was the only one, if you guys say, try to find this out of the budget. Performing Arts Center doesn't have the money to buy those 2 security cameras, so we would need to actually put the funding into that one. And the other ones, I wish that the chief was here this evening, he's not, I could have answered more why these issues came to the light.
Burke, you wanted to
My only
comment?
comment was just, my recollection of the meeting was Mary and I were sitting next to each other, and I think, you just invited them as well to bring forward these requests through this process. That was the reason why I think you have both tonight.
So, Paul, would we consider something a little bit in the middle? I mean, the Board of Ed is funding studies out of their own money, out of their budgets, to ask the town to fund the study out of their own budget, but maybe provide the preliminary equipment out of the reserve the same way we are doing Board of Ed. Would that be kind of treating them the same way,
I think so.
still
Yeah, I
allowing
think
them
so.
to move forward?
Nancy's here, I don't know, I'm just wondering if maybe Nancy, if this is discussed at the board of selectmen meeting, if there's,
Where specifically
if you,
it's going to come from?
no, if you want to address any of the items from I don't know if you discussed it at your board of selectmen meeting.
Really, the only comment that was made was that we had questioned the items being specific that were in there, and then also the study itself being part of it, and would it be more prudent to have the study to then really determine if all of these items would actually be, go ahead. But then there was some discussion that the police chief had looked at it, and others had made some recommendations, and in fact, those things were some things that we wanted to get done, so.
Okay, so Chief did comment on these items.
Not at our meeting, but it was shared that he had been part of the process.
Okay.
I kind of like Barb's, I
Yeah, I do.
mean, so we be fair, I mean, so we take out of reserves the 77.6, so those are immediate needs, they're safety needs, even though some look like security and safety. There is such a difference, but the Board of Ed didn't ask us for security, they just asked for safety, pure safety. The $25,000 a study, maybe that's where we take it out of their operating budget, do a transfer, just approve it, but subject to a transfer from the current year,
I could just tell them
All right.
that, and that would be,
Well, we-
approve the 77.
At least they could come to our meeting and,
Okay.
But then you don't have to come back, so we approved it and we're done, right?
yeah.
We make an open-ended transfer out of.
I'm not sure we could do that, though. I think they'd still have to come back. I think they'd
The
still have to.
25,000.
I mean, they could go ahead and do it on the assumption that no one would approve it, but I think we'd still need to approve what specific accounts it's coming
Yeah.
from.
I would like
Unless
to
they
be-
took it from their consulting budget.
That's exactly.
They could do it right out of the consulting
I'll
budget.
relay that to
Exactly.
Mary.
Okay, all right,
But the other one, the 77 is going to be really hard.
okay. Jeff, do you want
So then
to
I'll
make that motion again?
move
But be
to
specific
recommend-
about 809C?
Yeah. So I'll move to recommend that the Board of Finance, that we approve a supplemental appropriation requested by the town of Simsbury to cover the cost of short-term security recommendations in the amount of $77,600 to be drawn from 809C.
Right. Would you just amend that slightly to say, as outlined in Tom Roy's January 25th?
As outlined in Tom Roy's January 25th, 2013 memo to Mary Glassman with a copy to Chief and Tom Cook.
May I ask for one more slight modification?
Sure.
Instead of doing it in an amount of and an amount not to exceed, please?
That's fine, too. Yeah.
Because if it costs less, we'll be happy.
I'll second that,
We'll be very happy. Okay,
as
all
modified.
right. Any further discussion? All those in favor say aye.
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 Okay, unanimous approved. Okay, somebody want to make a motion on the item 3? just to make a suggestion to the board.
Make a motion.
I was just going to say, I move that the Board of Finance recommend to the Board of Selectmen that they evaluate their current operating budget for sources of funding their $25,000 security audit and come back to us at an appropriate time to identify the appropriate transfers to accomplish same.
Second.
Okay, any further discussion?
One question. Nancy, do you know if there's a timing issue with doing some of this?
I don't believe so. I don't believe that was discussed. I mean, I think when it comes to some of the safety things, the discussion was sooner rather than later, but it was not outlined if there was anything specific.
Thank you.
Okay, all those in favor say aye.
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 Okay, that is approved. Okay, next item on our agenda is the, under this section, is the Dewey Farm cleanup.
Yep.
There was a memo in your package dated February 20th from Rich Zawitsky that talked about the changes up there at Dewey Farm and the need to transfer funds from the miscellaneous building account in order to handle some changes up there as far as the outbuildings and remaining agriculture and fertilizer and chemicals. Mary Ann, I want to make sure I understand that correctly. This is just a request for a transfer, an interdepartmental transfer?
No, there's no money in that account. They need the 25,000 to cover the costs of cleaning. If you,
Okay, well, yeah, it says we are requesting transfer of any remaining funds from the miscellaneous building account at the end of the fiscal year 12-13.
The packet I just gave you tonight, it's clear. That's what the Board of Selectmen approved on Monday night. And it's, you need to approve your request for $25,000 to cover the cost of cleaning up Dewey Farm. It was not budgeted. There's not enough money in the miscellaneous building account. They don't have $25,000.
How much do they have?
I think the budget was 14. The budget, I think, was only 14,000. It's not a big account, so. The cleanup of this is, the town owns the land and the building, so.
When, did Rich say when something like this would even start?
Oh, sooner than later. They need to get it in there to clean up the building.
Can I ask a policy question?
Sure, go ahead.
How is it that the town of Simsbury would put itself in the position of acquiring a piece of real estate without having a Phase 1 environmental study done prior to acquisition?
We've owned this land for a long time.
They've owned this building for a very long time.
You haven't owned it for longer than Phase 1 studies have been being done.
This has been
Rich said the other night we've owned it.
How many years?
Yeah.
That was Farrah's.
How many years?
We bought this like 10 years ago.
Phase 1s have been in,
Yeah.
definitely.
I don't think it was that it was there, it's that the tenant farmer put it there as supplies while he was there.
Oh,
And now he's.
so we did do a Phase 1, and then it subsequently turned out to be
It's not
contaminated.
it's stuff that's in the property, in
Yes.
the building itself, stored as, farming
Okay.
stuff.
I think Kevin has a valid question. I think I'd like to have Mr. Zawitsky here at our next meeting and talk about this a little bit further.
I'm wondering if he's in the building.
He is.
I know.
He's in the building.
Yeah.
Okay, all right, let's table this and move on.
Kevin, there's no indication that there's any contamination. They're just
No.
trying to get the chemicals.
They're just trying to clean up the
Yeah, but
property.
$25,000 is a lot of
What's the
funds
difference?
coming out of
The
reserve.
presence of environmentally sensitive chemicals and pesticides, whether in a bag or in the ground, is still part of a Phase 1 when you acquire something. The identification
It's true,
thereof.
but I'd rather have them in a
Okay,
bag.
I want to keep things moving along here a little bit. Mary Ann, the public safety grant, is there anything further beyond the public safety grant that was in that package you just gave out?
No, not that I know of.
Okay.
Look at mine.
20,000?
Okay, so that is just to accept a public safety grant?
Yes, and this is just a thing from Jerry Turner to set up an account, but this is for $20,973.25. And I spoke with the chief today, and he said we're gonna get the money, but he wants to set up a special revenue fund to receive the funds in.
And this is for the Public Act that's mentioned in here, 11-174, Act concerning electronic recording of interrogations.
Correct.
We do a lot of that, I guess. Okay. Okay, I'll take a motion.
I make a motion to establish a special revenue account to accept the approved grant of $20,973.25 for the provision of police video equipment technology.
Second.
Any further discussion?
I just wanted to point out on that one, there was a time frame to spend the money, and I know it takes us forever sometimes. So, I just, wanted to make sure that we were going to get guaranteed that it would be closed. I don't remember the date. Was it September? That it had to be done by, yeah, the money disappears in September. So would we consider putting into the motion to open the account for the purposes of getting this completed in accordance with the grant terms?
You want to amend your...
No, I don't choose to amend it. I think what we've done is sufficient.
Okay.
They know they're going to lose the money if they don't do it.
Right.
I mean, I don't think we need to tell them that they're going to lose the money.
Yeah, I don't think so. I just want to point out that
It's an informational. Okay, it's a point of information. Okay.
Yeah.
Who seconded that? Who seconded the motion? Barb did. Okay. Any further
I
discussion?
withdraw my second.
All right, Peter seconds it. All those in favor say aye. Aye. Any opposed?
Nope.
Okay. All right, Mr. Zawinski, you're on the hot seat here. Okay, regarding this, the condition of the Dewey Farm as far as the fertilizer and chemical products that are up there. Why do we need $25,000, and what did we do with Phase 1 when we acquired it?
This property, if you'll recall, was kind of an interesting acquisition. As far as the price of land was quite a bargain. It was acquired about 14 years ago with a life tenancy purchase agreement from the Deweys, which of course greatly reduced the purchase price. And they, of course, could stay and use and maintain the property until the occurrence of Mr. Dewey's death, which happened late in 2012. We're in the process of determining exactly what we're going to do with the facility. And we did an investigation out there. There's numerous outbuildings, a lot of outbuildings, in pretty poor condition. And we suspect some remaining agricultural fertilizers and chemicals. We can't really be 100% sure until we get a company in there to take a look and do some sampling.
So how much of the $25,000 is for that versus tearing the buildings down?
Well, right now I'm estimating that there's about $7,000 to pull all the buildings down, about $5,000 to $6,000 to clean out the inside of the place, make safe certain things that are in bad shape, secure the building. About $3,000 to do the investigation, and the remaining amount to clean up as well as some contingency. So we're not 100% sure what we're dealing with fertilizers and chemicals. We see some bags of stuff, we see some containers of things. If indeed that's the only place they are, then we're just having a removal company take them away to secure facility. If in fact they spilled on the ground, then there are some unknowns. And we won't know that answer until we do the testing.
Okay. Is there any need for us really to take these funds out of reserves at this point versus just doing an interdepartment transfer at the end of the year?
That's kind of what I'm recommending. You know, we want you to be aware of this and to be aware that we might come in for a transfer. If in fact we have adequate funding left, in particular we are building and facilities accounts, we would be asking for a transfer.
I think we just had a discussion around safety study, and versus taking it out of reserves, we really suggested it come out of the operating budget as transfers. I'd feel comfortable just doing the same approach and taking it out of department transfers, unless, of course, at the end of the year, we say we can't do it. Yeah. And then we might entertain doing it that way.
That's essentially what I was saying in my letter to the board, and that would be suitable.
Okay. I'm going to then suggest that we just table this and see how it goes during the course of the investigation.
Okay, thank you.
All right. Rich, thank you so much. Appreciate it. Okay, next item on our agenda is We're going to go back to the pension and OPEB presentation. This evening, we have a guest, Chris Cashmeyer from FIA, which is our outside advisor on our pension investments. Chris, I believe you've been here before to the Board of Finance, but most notably, you're usually at the pension subcommittee. But wanted an opportunity for the whole board to have a chance to talk to you, discuss our returns for the last year, 2012, and an outlook for, what we might have for 2013. So with that, I'm going to turn it over to you. The board members received your package electronically. We also have hard copies. So if you don't mind, I'd ask you to come up to the podium, if you would, just because of SCTV. And if you want to have, 30 seconds to tell a little bit about your firm and what you do, that's fine as well, and then we'll move forward.
Great. Well, good evening, everyone. Good to see a lot of familiar faces. As a reminder for the edification of the full board, Fiduciary Investment Advisors is a Windsor-based RIA, registered investment advisor, that renders consulting services to institutional investors like the town, strictly fee for service. We're not brokers, we're not dealers, we don't sell products, we just offer advice. And are fortunate enough, I think as the board may remember, to do a tremendous amount of work around the capital region with a number of your peers. I think all of the Farmington Valley towns are clients, as well as are the likes of Glastonbury, West Hartford, and a number of other communities in the vicinity. And remember that approach, very quickly to summarize, really orients around helping with asset allocation and trying to specify correct allocation strategies based on the demographic of the plans and the actuarial considerations, helping with manager selection and monitoring, and offering ongoing advice when we see opportunities and things that the plans may be able to take advantage of. That's who we are. That's what we're about, I suppose. I think the chair has asked me to confine my comments this evening to a quick update on performance with pension and maybe a little bit in the way of perspectives for 2013, and similarly to do that for the OPEB trust.
And then we'll open it up to questions to the board members.
Right. Absolutely. I would remind the board before we dive into the particulars, you'll remember certainly for the pension it was a year of transition. So the portfolios, the three portfolios, town, police, and the Board of Ed plans had for a very long period of time had a legacy relationship with Frank Russell. You may remember Frank Russell, that relationship was construed being kind of a turnkey solution, a fully bundled solution, where Frank Russell was providing a package that had an allocation strategy associated with it and then selection of underlying managers. And through a series of meetings and discussions, the decision was made to go to more of an open architecture approach, which is more typical of your peers and what we see in the marketplace. That offers up a number of what we think are in the way of advantages that can be highlighted in cost savings for the plans. They're going to be highlighted in terms of access, in terms of getting to what we think are best of breed managers, if you will. And it also offers up more in the way of flexibility. When you may remember, the Frank Russell construct was one where you didn't have a lot of transparency through to the underlying managers. They did their things and they kind of did it at their whim, if you will. The portfolio you have before you is very discrete, specialty managers. And as we've always talked about, one of the principal motivations for that structure is if there's a problem with a particular manager, you can address that situation and not affect what's going on elsewhere. With that, so the transition occurred, just for a frame of reference, in the fall. Ironically enough, I think it happened right around the hurricane, towards the end of October, and we were working with the town administration, and fortunately all the monies flowed through, and the portfolios were immediately up and funded in the new structure. So it is a very immature portfolio that you have that I'll show you, and the performance that you'll see, as you can appreciate, is by and large associated with the Frank Russell experience, right? So what we've done in our systems is we've loaded all that back data in, And over time, we will link that historical data with the results of your existing portfolio and the new one. But really what you see in terms of performance is really by and large Frank Russell, absent a couple of months at the end of the calendar year. Any questions in terms of the pension and just kind of backfilling with what happened over the last couple of quarters? If not, let's do this. If you would, in the hard copy books behind tab 2, if you turn to page 12, there's an allocation schematic there that shows the existing portfolios for town, Board of Ed, and police. They all currently share the exact same asset allocation strategies. And you see there, if you orient your attention to the far right column, the target allocations for each of the plans. The motivation for those target allocations, as you may recall, I think we've talked in earlier meetings, was again working alongside those actuarial demographics, the return needs of the plan, the risk tolerances, and trying to strike that balance, as you can appreciate, between a mix of equities and fixed income. So today the portfolios, just at the very high level, are 65% equity or thereabouts and 35% fixed income if you do all the arithmetic and carry all the mandates through to their end portfolios, if you will. And the other theme I would offer up, or observation, I suppose, on page 12, there are a decent number of managers, as you can see, and that's by design, right? So there's the specialty approach with, we think managers that are very best at what they're being deployed for on behalf of the town. There's a lot of diversification by style. There's a lot of diversification by entity. And again, that is very much by design. So you see there that the allocation strategies are very similar. And that's the immediate intent is to keep those similarities in place. The one caveat I would offer up in terms of the transition, just as a reminder, the real estate strategy that you were in with Frank Russell, it may not immediately occur to you, but it came with a 120-day notice in terms of liquidation. So while the vast majority of assets came over, those monies will come over in the month of March, actually. And that final transition will take place into the new real estate manager. But otherwise, all the transitions have been completed. We don't have recommendations necessarily for the board tonight, certainly in terms of the allocations. We think you're up and running. Now we just need to let these allocation strategies mature a little bit and kind of let the managers do what they're good at. Probably more pertinently of greater interest on page 13 is the performance. And what we've done here is, in the performance for the three plans, as you can appreciate, is very similar, if not identical, very similar. So just for purposes of expediency, we kind of highlight here the aggregation of the three portfolios. For 2012 calendar year, the portfolios returned 12.6%. As you see there in the middle of page 13, under the one-year column, 11.5% for the blended benchmark, or the kind of the benchmark that we reference the managers against. So there was, fortunately, I think it's a nice outcome for the town. A lot of activity going on, a lot of transition things happening behind the scenes. But fortunately, through that full calendar year, the collection of Frank Russell and the new managers were able to generate competitive performance on behalf of the town. And often you'll see in transitions of this magnitude a little bit in the way of friction as you kind of transition to a new approach, if you will. Here it was able to come together fairly seamlessly, and it was accretive.
Just a quick question, Chris. Is both the reported aggregate return and the hybrid benchmark reported on a net or gross basis?
The hybrid benchmarks are on a gross basis. The plan experience is net of investment management fees.
Okay. Thanks.
The longer-term track records there, again, are for your edification. There's the Frank Russell legacy experience. Those clearly over time, as the new portfolios mature, will start to move further in the rear view menu. But for perspective's sake, we offer them up here so we'll have some comparatives. There was also a question.
Sorry, another question?
Oh, sure.
Just looking at the performance over extended periods of time, forget inception, but to the extent that there was an assumed investment return of, say, 8% over a good period of this, over a good period here, in those years where the 5-year return was 2.6%, or something less than the targeted 8. I think it's now lower by design, but that's where some potential underfunding can occur, right?
Absolutely. And it's interesting, look at, one of the additional data points that may come true with the board. Look at the bottom of 13, look at the calendar year experience, just as an additional frame of reference, and you kind of test it. If you're testing that 8% number, it's interesting, right? There are actually a lot of periods where you do meet the return objective, and then you throw in a 2008, and, the numbers just run amok.
Which was, for those of you who don't have the book in front of them, was a negative 29.2 in the year 2008.
So that is a year that's going to clearly have to burn off. 2011 similarly was a difficult year in the markets and a volatile one. The other question or the other perspective I would offer up, and it's dear and to all our hearts, I think, and really the most pressing issue that we see among municipal plans is just kind of challenging return assumptions and across the state directionally. Clearly, those return assumptions are being truncated. The pressure is down, as you well know. But we do think that the allocation strategy we have in place today, as evidenced on page 12, that again, that 65-35 equity fixed income, does align with where you're going from a return standpoint with the revision. So we think that the allocation strategy is an appropriate one.
When it comes to the fixed income portions of these allocations, Chris, what kind of duration would you say is the average for the blended portfolio?
I would say probably today, Kevin, if you Met West and PIMCO probably are both running somewhere around 4 3/4 years. Templeton, interestingly enough, in the international space runs much shorter than that. I think they run something like 2 years or thereabouts. So if you do the arithmetic, you call it, maybe 4 years, something like that.
Sure. In order to get our investment return to 7%, are we taking unnecessary risk in here more so than most towns?
No, not certain. No, I think your allocation strategy is very representative of peers, and I think that when we model the numbers, kind of in our optimization framework, this is an allocation strategy that is kind of designed to get you towards 7%. You do have the toggle point, and I'm probably stepping off the reservation here, and this is maybe more a question for Becky and the actuaries. There has been, the other component of return that isn't in that asset allocation study. We talk about 7%, but you do clearly over time, we have an expectation, I suspect you do as well, that those active managers will earn their keep over and above the benchmarks, right? Or else just index the whole thing. So we can debate, and there's a lot of actuarial discussion today about how much credit, I put that in quotes, the plan gets for active management. I'd submit to the board that over a long haul, we think that 40, 50 basis points of incremental return is reasonable. And you stack that on your
net.
Net. And you stack that on, your 7% number that comes via the allocation itself. And, we think that, it's the rationalization for the allocations you've got in place.
One question, if
Sure, go ahead, Jeff.
Peter,
thank you.
The short-term liquidity, say 1.2 for the town and the Board of Education, 1.3 for the Peace Plan, I assume that's actually based, assuming certain, based on the composition, I guess, of the workforce and the employee hiring.
So that is, we don't actively or strategically allocate the cash. And so what that is basically the byproduct of working with Mary Ann and the town and making sure you've got liquidity for pension payments and the like. So that's kind of how we'll replenish that over time to make sure you've got a couple months of liquidity so you're not introducing frictions to the allocation.
So that's pretty typical at any point in time, around 1.2% of the total assets for pension managers.
Yeah. Any, we, of course, and then I would reaffirm again, we think this is a pretty dynamic combination of managers. This evening we reaffirm it on the board's behalf, and I think you're in pretty good stead, both from an allocation and managers standpoint.
I would just comment on, for those who don't have the book in front of them, that the beginning market value for our plans collectively was $41.5 million. And at the year end, it was $46.5 million. So our net gains were pretty solid for 2012. We still are looking very closely at what the plans are doing. The board took positive steps at the last meeting to move our investment assumption down from 7 3/4 to 7%. Along with, and that was after talking with our actuary and concurrence with the actuary. She would have felt comfortable probably going even more, but we don't want to put the board's budgets in severe strain. So I think taking that down, and we're going to monitor it very carefully as we move forward. So I think that was very good.
Just to clarify,
Sure,
you say the board, you're talking about the pension subcommittee.
This goes too.
And the Board of Finance.
This board has not voted on.
Didn't we vote on that last time?
I don't
thought we
believe
just
so.
had a discussion on that.
We did have a discussion.
We didn't actually take a vote. Okay, fine. But we're there.
I mentioned 1.5%, yeah, so.
1.5, you want to go to 1.5?
No, not to 1.5, we
Okay.
talked about, ranges, I think.
Oh, right, okay.
And how quickly we would get there, but we didn't vote. Do we need to do that?
No, I don't think we needed to. So,
I'm so
okay.
pleased the actuary discovered this.
Well, actuaries, they're very thoughtful. They're very thoughtful.
And
So,
definitely expertise.
do you want to, Chris, we could bounce back and forth, but you want to spend a couple minutes on OPEB?
Sure,
And then I have a
absolutely.
question on OPEB.
So that is for pension now. Remember, the OPEB behind tab 3 approach has been very different. And I guess we can start the discussion on page 52. Several years back, the decision was made to get the trust up and funded, and to get it funded in an expedient manner, and to do so in a cost-effective manner. So the approach was different. There's no active managers, it's all indexes. And you see that outlined on page 52. It's a somewhat more conservative allocation than the legacy, more mature pension plans. You see there that it actually has a 45% weight to high-grade fixed income. Again, that's by design. And the directive, if you may recall, several years back was for automatic rebounds in each quarter. So as we come into the end of each calendar quarter, we work with the town to trim the overweights and redeploy back to underweight asset classes. So you do see there, I think that effort is probably evidenced in the balances here. No great surprise, you're very closely aligned with the strategic targets, and that, of course, is the objective. There won't be active performance here, right? There's no incremental performance. The fluctuations that you'll see on page 53 from benchmark are really a twofold in nature. There may be over time small allocation, tendencies away from the benchmark. We're not rebalancing every day, right? It's too expensive to do that, so you're kind of mixing and matching and trying to strike that balance. And then there is, without dragging the board too much into the gory details, there are with iShares some funny technical considerations in the market where Barclays, which is the ultimate arbiter of these things, strikes security values a little bit differently than do some of the custody banks, and you'll see little fluctuations that over time true up. So as an example of that, look, for example, the one-year number. The portfolio returned 11.6%. You see it plot a little bit behind benchmark for the reasons that we just talked about. More importantly, go back longer term, we would expect those differences to true up. So look at the since inception number in June when you started the effort, and you've got an annualized number that's basically right on top of the benchmark. So that's the type of relationship you'll see longer term, although short term you may have little deviations above and below that benchmark.
And it's worth noting for the audience at least that unlike the pension plans, which were just transferred from Frank Russell over under your auspices, you've had this for the last 3 years. We started
Since inception,
with FIA.
So despite your, or in light of your comments about the, trend to have the benchmark and the performance essentially be on top of each other because it's an index benchmark and it's an index strategy, you don't feel there's any significance to an 80 basis point 2-year differential or a 60 basis point 3-year differential in performance to the benchmark? Negative differential?
Yeah, I don't think so, David. I think it will true up over time as we've seen this with longer standing relationships, these iShares as well that go beyond even 2008. So it is, the iShares are a nice tool. They're not a perfect tool, and they can fluctuate a little bit with NAV considerations and some other things, short term. But again, the confidence that we have in the structure is longer term in nature, and those things do seem to clean themselves up over time.
Is volatility in the markets part of the problem?
Well, I do think, Nick, so here's the thought, right? So if you start, let's use an actual example. January 1st, 2013, in theory, the portfolios are allocated right on top of their benchmarks, right? Because we've worked with Mary Ann in the town, everything's been rebalanced. Now, we don't address that rebalancing again towards the end of March, right? So along the way, maybe equities are doing better than fixed income, or conversely, and those fluctuations and deviations are kind of getting captured in that stream along the way, right? Because the rebalancing isn't precise and immediate, and it's not always perfectly on top of those strategic targets. So the short answer is to your intuition. Does market fluctuation create some of this shortfall near term? Yeah, it does.
Well, I guess I was thinking in 2009 and 10 with the VIX volatility index being all over the place, whether that was just part of the reasons why, Kevin's noting the 60 to 80 basis point drag here, and I just was wondering if that was part of the reason for it.
Well, I don't know. I mean, I think that really, if the ETFs are doing what they should be doing, if the iShares are doing what they should be doing, they should be, I suppose, if we're going to really dig into this, they should be somewhat indifferent to that underlying market volatility, right? Because they're designed just to capture the performance of that market. If it's up 10% a day, the strategy's designed to be up 10% a day, and vice versa. But I do think what you do see here is that fluctuation you have from target day to day, right? So if we could in a perfect world rebalance continuously, and there was never any fluctuation from those targets, that would collapse significantly, right? That deviation. But that's not a kind of a pragmatic.
I guess arguably quarterly rebalancing is, in a sense, makes you a market timer.
But it offers that discipline,
yeah,
right?
Understood.
It's strategic targets, and it kind of strikes that balance between costs.
But you're burdened by that decision. Right? We're burdened by that decision as you said, if it was just continuously rebalanced, they'd be on top of each other. Okay, thanks.
Okay. Further questions for Chris on that subject? Okay, Chris, I just want to, while we have you here, and take, what can we expect for 2013?
Let's
you getting hot tips for us?
Let me write this down.
We've got that all mapped out.
Paul wants to become a day trader.
Yeah, there you go. There you go.
If you flip back to page 7,
yep.
in the materials, there's a kind of I think a nice summary exhibit that just speaks a little bit to some of those ideas, perhaps. It's difficult, I think, as we sit here this evening to think, in all frankness, that we can replicate in the equity markets the type of returns that we've had, certainly in 2012, where we had mid and upper teen type returns. We've come a long way from 2008 in terms of valuations and performance. So what I'd offer up is, on kind of a summary level, is the following. The macroeconomic backdrop remains a decent one. It's certainly not a great one, but it's a decent one. It's a fairly stable one, and more recently, it's been supported by housing data that is printing much stronger, I think, than the markets at first thought. You probably saw some of that again today, and the markets responded in kind. And you've got a lot in the way of stimulus and commitments to further stimulus and accommodative stances from the Fed and from the ECB in Europe. And they've been pretty pronounced and persistent and suggesting that they'll continue to offer up those stances. And those stances kind of naturally, right, orient investors towards risk assets and higher yielding assets, if you will, and you've seen that play out in capital market outcomes over the last year or two. The emerging markets, we think, are starting to revert back to a growth profile that is more aligned with their fairly attractive demographics, maybe most notably in China, where you start to see things reemerge a little bit. So I think the macroeconomic backdrop is a decent one. And again, with the stimulative backdrop, that is helpful as well. The other challenge and the other probably observation that's necessary is, so we've run up pretty aggressively since 2008. Where are we from a valuation perspective? So if things ultimately mean revert, one litmus test we can have, and it's, I think, an appropriate one, is where are we trading today from a historical perspective, and kind of start that analysis with equities. And I'm not going to go through it in the interest of time, but if you were inclined on pages 8 and 9, there's a whole lot in the way of statistics there. The summary takeaway is that when you frame valuations currently, and that's not just in the U.S., it's not just in large cap, it's really across the globe, you can make a pretty ready case that valuations are still decent. And in fact, for most areas and segments of the capital markets, the equity markets globally, we're trading inside those long-term averages still. So that would be indicative of, if the economy stays on an even keel, that we can continue to see decent returns. Now, albeit not, I think, what we saw in 2012, but it's a 6, 7, 8, 9% type equity return in a broad sense reasonable. I think so, and again, supported by the valuation.
And Chris, so, I mean, Nick and I we sit in on the pension subcommittee. We hear a lot of this, but again, just what you're seeing, we're still allocated properly for 2013. You don't have any significant recommendations on changes. The strategy we've developed and you put in place, at the end of last year is still appropriate for us.
Yes, on all fronts.
Okay.
Yes, on all fronts.
Great. I think that's what and also just remind everybody that this is for our defined benefits plan, not for the defined contribution plan, which is going into place with some of the town personnel moving forward. Right. Okay. Great. Any further questions for Chris? Nope. Okay. Thank you very much.
Thank you.
We'll probably ask you to come back in 3 or 4 months again, so I appreciate it.
All right. Have a good evening.
Yep. Safe travels. Thank you. Okay. Next item on our agenda is to. Well, let's save that for the end. Let's do that for the end. Let's get right into the bond results. We've got Mary Glassman and Mary Ann Harris here. We talk a little bit about the bond results today. The town went out to the bond market today for roughly $5.5 million. It was to fund the Simsbury Farms project, Latimer Lane roof, the Ethel Walker land purchase phase 2, West Street, Owensbrook Greenway, and the total borrowing was $5,555,000. We did have a Moody's reaffirm our AAA rating which I think is absolutely terrific, especially considering all the things around the environment that we have to operate in the state of Connecticut, which I won't get into at the moment of my thoughts of that. I do want to just say that I think the town, the Board of Education, and the Board of Finance are certainly to share all of the credit for that AAA rating. And Moody's, if you noticed in their report, here it is. Moody's in their report noted that one of the reasons for the AAA rating was the conservative financial management of the town of Simsbury, which goes around, I think, to everybody. Our stable reserve position, along with our conservative budgeting practices, the strong fund balance that we maintain, the management of reserves, our conservative collection rate, and they specifically said 98%, the proactive approach to OPEB, which we heard a little bit about earlier, that we're funding 100% of our annual required contributions on the pension, and the conservative debt policy. So I think kudos to the Board of Finance, the Board of Selectmen, and the Board of Education for making all of that happen, along with town staff. So with that, Mary Ann, I'm going to turn it over to you and Mary for just give everybody an update on the results of today's bond bid, which I think is very, very positive.
Yes, the issue was that we had 8 bids come in, and the lowest bidder was this company called FTN Financial Capital Markets, and they're out of Memphis, Tennessee, which was a real surprise.
It stands for, was it First Tennessee National?
First Tennessee National, correct. And they came in with an award of 1.299, and that's the lowest bid the town has seen. When I first started last year on the advanced refunding, we got 1.30. This is 1.299. I have attached to your packet this evening the sources and uses. This is paperwork that we have to fill out, and of what we're going to do, what the bond proceeds are. We received a premium of $57,707, and the underwriter's discount was $25,311. The true interest cost was 1.299. The bonds are 1.5% for the term of the bonds, so they're because we're getting a premium paid. And we did have a reoffering, and we awarded to them. It was very close between the 8. The highest was Stern Aggie Leach, and I have no idea where they're from, and they were at 1.611. Roosevelt and Cross, which is a local firm, was 1.33661.
So do we have any other callable bonds?
These are callable.
No, I'm saying in our
Outstanding.
I don't believe so, and that's, I mean,
We went through that
seriously.
last year, right, when we were...
Yes, and we did the and that was 1.3. We beat that today, and we were like one of the only ones in the market in Connecticut today, so we were fortunate. The city of Boston is issuing tomorrow $150 million. So we were lucky to be in the market today.
Let's see if we do better or worse than they do.
Well, they're a AAA credit also,
I think their bonds, they're issuing $150 million.
They'd have some size efficiency, I have a feeling.
Ours are bank qualified, tax exempt bonds, and I think that that's what made us so attractive to this group of buyers. And we, this is done through electronic bidding now. So we did it, we actually had, they came in through parity, and at 11:30, we pressed the button, and Paul was there, and we saw all the bids automatically.
Do they bid on the whole thing
They bid on the
together,
whole
or do they bid on all the individual tranches?
They bid on the whole thing. They have, what happens is they pre-sell. So they know exactly what they're bidding. When they come in, they do a pre-sale, and they can, as was explaining to us, they can go up to like 20 seconds before to put their bid in. And we do get that every so often. We had people sign up that they were going to bid, they were looking at our bonds, And they did do that. So we
They
did
put
it.
their bid in about a half hour ahead of time, right?
45 minutes
About a
that
half
time,
hour
yeah,
ahead
their
of
bid
time.
was early. when we
And a
looked
couple
at it.
people put their bids in like 5 minutes before.
In 2 seconds.
So, yeah.
so that-
They can't see each other's, can
No,
they?
they cannot see each other's. It's a blind bid, and they can't see each other, so.
Until it's done. Once Mary and I awarded this morning, so once the award went out, then if they wanted to see who won, they could see First Tennessee National. So it did come out of Memphis, and we asked what were they thinking about Simsbury, Connecticut, but they said they might have some institutional buyers or a buyer who is in Connecticut who's moved to Tennessee. We don't know. So they just liked our paper, and that was what we wanted
They
them to
did say
do.
it could be, wealthy investors from Connecticut who like the federal and Connecticut tax-free nature of it.
Yes. That's what they.
Just
liked.
remember, Tennessee has no state income tax.
Yeah.
It's true.
Were you surprised at
But
the
if you live in
spread
Connecticut-
between the high and the low?
Can you
No,
know
as a
somebody
matter of
there
fact,
going through
yesterday
that?
I had, and I will forward when Bill does the comps from today. Yesterday, when I was looking at what he had sent me, I was at 2%, and I actually thought, oh geez, we were estimating 1.8, and when this number came in, I was thrilled. I want you to know that when this number came in, I was really thrilled. This was like, because we were told that it was gonna be like 1.8. They're gonna redo the cash flow analysis for us, so you will all be getting an electronic copy from me before the CIP comes before you next month.
And everybody should have, gotten a copy of the bond offering statement, which was 128 pages long.
Yeah.
Short
If
one.
you printed it,
No, I did not. I printed out like the first 38 pages, double-sided.
yes, that's what I
So-
said I would have printed those for you guys, but
Yeah.
it's a long offering. What we can do when we get the final, look at the finals, and we'll present them next month.
Right. Mary, did you, I'm sorry, Mary, did you want to add anything?
Nick has a question.
Okay.
Oh,
Okay. Go ahead,
I just
Mary.
wanted to congratulate everyone. This was the lowest interest rate town has ever gotten. I can't remember a time that we had a lower interest rate. And the fact that the number of bidders were so many, I think goes to the fact of the AAA bond rating, which is, in this economy, is really a credit to the town. We know there are some towns that are on a watch list in Connecticut. So just because you have a AAA doesn't mean you keep a AAA. We are constantly mindful of that. But this is a great day for Simsbury in the morning because this is really significant for us.
Well, I think aside from, our conservative fiscal practices, we also ought to send a thank you note to Ben Bernanke.
Yeah, for saying he's going to keep rates down for a while.
Forever.
Well,
It's actually a good time to be in the market, that's what they're telling us.
I mean, with the 10-year maturity, longest maturity on this, that probably helps in the
Yes.
process as well, because, doing that, we're keeping the duration risk lower than, obviously, somebody who's going out for 30-year
For 20
paper.
years, 30, yeah.
That's what Moody's did say, and
Yeah.
when they were rating us on that, they said that.
Do we have on our schedule when we'll do our next bonding? I mean, or does that depend on what we do this May?
We do this May, correct.
Yeah.
So this year is the low year, and next year it gets, you're gonna see, when the schedule comes out, we'll give it to you. It is changing, and we'll do a new cash flow analysis for it.
Another challenge for us to face.
It's a huge challenge for us to face, so we're looking at that, and
We love challenges around here.
we're looking for the new analysis
Right.
tomorrow. This will be blending in with this piece here, so
great.
the new pieces are coming in.
Okay, does anybody have anything further on that subject? Okay, I'm going to move on. Grand list update. We had an updated letter from Dave Gardner regarding the grand list. Basically, he's saying that the residentials, due to the reevaluation, overall, we were at $2.6 billion. After reevaluation, we're at $2.239 billion. Basically, residential went down, if I'm reading them correctly, about 15.62. Commercial and industrial went down 12.55%, and, quote, all land went down about 13.58. So he was talking about those numbers. He also talked a little bit about Hartford Life, that what their taxes would be, real estate, 1.1 million roughly, and 619,000 for personal property. So real estate and personal property both. We'll talk about that a little bit later, I'm sure. So that was the reevaluation. Again, he just said in this, I believe, he doesn't have to make a final filing until, I thought he said sometime in May.
May 1st.
Right. So wanted to just let everybody know where we are. Does anybody have any questions on that? No? Okay, that's an update. All right. Next item is the fiscal year 2014 budget discussions.
I do have one point.
Sure, go ahead.
I think it's to the extent that the public will kind of picks up on this, because there's an observation in the memo that I think is interesting for the whole public to be aware of, because Dave went on to essentially say that based on this change in the grand list, to produce the same amount of revenue, that the mill rate would be somewhere in the neighborhood of 36.6.
Yes, thank you.
I think that's an important number for folks to be cognizant of as they contemplate their new assessed valuations.
And that was a suggestion of yours, Mr. North.
I know.
So thank you for that.
Oh, thanks. It's helpful. It's just helpful.
It is helpful.
To frame it.
It was very helpful, so thank you.
And you also, we had him do the, a memo regarding the auto taxes, so you did get that one.
Right.
The loss for the town.
Right, thank you.
Thanks.
Okay, next item. There was an item here, Marianne, on the 2014 budget discussion, operating CNR and capital and possible action.
Right, and we had left that from last month. There is a question, Burke and I need to know, what is this board's determination on the OPEB? We know that the 7% recommendation is coming down for lowering it. We're at 7.5% on the OPEB valuation.
My understanding
like,
was that we were going to leave OPEB at the 7.5.
Thank you very much.
Just because of the fact that it's still relatively immature. We've been making contributions. And my feeling was, and I believe Peter shared that as well, that we could probably leave that at 7.5 for this year.
Okay.
And then we'll just keep looking at it.
Yeah.
Again, our intent is to make changes in the pension plan, but not be so onerous on the boards that we do everything all at once. And that's why my recommendation was not to go to 6.75, but rather at the 7, and then I think I'd feel comfortable leaving OPEB at the 7.5. Or I don't know, do you guys want to comment on that?
We've got a different set of liability obligations there,
Right.
so for the time being, until we can see more, and as you said, it's an immature plan, we've been in it for 3 years now, we've got time, and we can take a look at it.
Kevin?
I just have a point of clarification. That determination will be made by the Board of Finance, correct? Because that was where the
OPEB is with us.
Yes, that's the
Yeah,
question
the
we're
board
asking.
want clarification so that when we're
No,
putting
I
our
just,
budget
I just
together-
want,
Right.
we've been talking so much about pension tonight,
I
I
know.
just want to make sure that
Yeah.
it's understood that there's a bifurcation of governance at the moment.
Right.
That's all.
Yeah, that's the reason we
It
were asking.
doesn't really matter, you approve our budgets anyway, so it doesn't, you know. could
Burke and I
change
have
it.
been.
And it's in consultation.
Yeah, I don't,
Burke
Of
and
Board of
Burke and I-
Finance.
And it's in consultation.
Burke and I have been working on this, and he said to me, Miriam, we haven't had an OPEB, so that's why the question came up tonight. And we are still assuming the extra 100,000 for CNR, and that's a split 50-50 between the Board of Ed and the town.
Right.
Correct? Thank you.
Right. So, okay, next item is calendar.
Have we actually made that determination?
No.
Okay.
No, that would have to come up.
it's just an assumption.
Right, it's just an assumption.
Okay.
We're using that assumption in our budget presentation.
Yes, we are.
Right, and we're using assumptions, again, we're using assumptions around, what our funding is going to be from the state, what's going to really happen with the governor's proposal on car taxes and, all that stuff. So we always operate with a few assumptions. Yeah, right. Calendar update.
Left that in, if you're going to have a meeting on March 19th.
Right, there is a meeting on March 12th, right?
Correct, with the Board
Then
of
there's one on
Education.
March 19th that's left open in case we need it, and then we have one on March 20, Which one is the public
27th is
hearing?
the Wednesday. That's the Board of Ed, it's the 27th.
Okay. That's not a public hearing, that's presenting the Board of Ed.
That's their presentation.
No.
Okay.
Board of Ed's presentation is the 12th.
The 12th is the Board of Ed, the Board of Selectmen is the 27th.
Okay, but our regular meeting would be the 19th.
Correct.
I suggested we leave it open for right now on the schedule, just in case we needed it. We can always cancel it if we don't need it. Right. We want to see how
Not going to be
the
able to be at that March.
I will not be that much later.
You won't be at the March 19th? You won't be at the March 19th? What's March 19th? Is that?
It's not basketball.
It's not a game? Okay.
Apparently something you weren't invited to.
Robot Day.
Jeff and Barbara are going somewhere.
Visit my son-in-law.
Really? Okay, good, great. Okay, well, let's just keep it open and then we'll see.
Can
Okay.
determine on the 12th.
All right,
Thank
next
you.
item on our agenda, correspondence. We saw the tax collector's memo, so we have that. There was one memo, or the one email I had gotten from a resident, Mary Ann, that I passed on to you and Mary regarding Farrows. I think you were working on a response for that.
Yeah, we are, just to respond, we're getting copies of the appraisals for the Board of Finance, but our council has indicated that the difference between the two properties is the flood, Farrell's Farm is mostly floodplain, and there's only 4 buildable lots, so that was factored into the value of the property.
Right.
And both Simsbury Land Trust and the town did independent appraisals. They were in $25,000. The town took the higher appraisal, which was ours, and so we processed the sale, approved the sale contingent on the town's appraisal, which is a higher one.
Okay.
The letter was based on the article that was in the Current this morning?
The email was based on.
Yeah, okay. No, it wasn't from this morning, it was a couple of days ago.
Yeah.
Right, it was a couple of days ago. So,
There was an article on Farrell's
there
Farm.
was an article on Farrell's Farm this morning, but this
Yeah,
was an
okay.
email that had come in a couple of days.
I see, okay.
Next item under correspondence, I don't know, Mary, this would be a point, do you want to touch upon this afternoon and the recent press release?
Yes, thank you. And just.
And this is really our last item on the
Yep,
agenda.
just so folks know, we were informed in March of the Hartford's change in restructuring, and I've been in contact with them really ever since. We put together a subcommittee to work on working with the Hartford. So we've explored, since March, opportunities to get in front of the Prudential and Mass Mutual. We've met with Governor's Office and State DECD. We've put together possible incentive packages the town could consider. We supply those to the Hartford. Since December, we've asked for meetings. Those meetings have been scheduled and canceled. So we had little communication other than us trying to get information, which was forthcoming, and requests for meetings. The meeting finally took place today. Paul was available by phone. Nick was available. And John Hampton was invited, Senator Whitcock was invited but couldn't make it, and Tom Cook was in the room, and 7 people from Hartford. No, I exaggerate. I was 6. But the point is that
2 spoke, the others were bodyguards.
The point is after our attempts to get information and find out what the next steps were, we were told today they had made a decision, and we have copies of the information for you, but the Hartford has made a decision to keep 2 out of 3 of their headquarters in Connecticut, and one is Hartford, one is Windsor, and the third one they decided not to maintain is Simsbury. They indicated that they have 1,500 employees there currently. They had, our last reported number was 3,000 employees, so they have dropped significantly since the last numbers they reported to us. They have 300 other sublease tenants, employees of the Hartford and Mass Mutual now. I mean, Prudential and Mass Mutual are currently on the Hartford campus in Simsbury. Those will be reassigned to other locations over the next 18 to 24 months. We already have a subcommittee that we have in place to work on the Hartford. We were invited today to participate with them in marketing, developing a marketing plan, helping to market, working with the state, and we'll be doing that over the next couple weeks. not good news for the town. We aren't surprised. We're disappointed in the way it was handled because we've been trying to work with them since last March. But if you saw and Paul and I discussed this earlier today, if you saw the declining enrollment of the employees at Hartford, and if you saw the track record of the personal property over the last several years, it was obvious they were moving resources to their Hartford and Windsor, primarily the Windsor campus. So the challenge will be not tomorrow, not next year, because the grand list has been set. We have guaranteed revenue from Hartford on the real estate and personal property through 2014. But the next 24 months to work with them on marketing the building, coming up with internally any ideas we have, any possible infrastructure or assistance that we can consider as a tool to market the material, the building. And we'll be working very hard to find a new tenant for the building. But that's our challenge. We knew since March, every discussion on the budget we have always includes uncertainty about the Hartford. In our Moody's conference call for our bond rating, we disclosed the Hartford and the concerns that we had, and we disclosed all the information we had that we were aware of up until 3 o'clock today.
Right.
Obviously, we didn't have that information. We fully disclosed that we were concerned about them. We considered that possibility in our budget presentation. It was certainly a consideration in my presentation to the Board of Selectmen on the 0.5 budget. And it's a concern. It should be a concern for all of us. We will have some spin-off effects, but it's an opportunity to get a growing business in, because we see that Hartford was not a growing business. That's all I know.
Right. Businesses make decisions. They made that decision. We just have to deal with it, adjust to it. We'll do that looking at our budgets moving forward, our capital moving forward. I think that'll have an impact on our view of capital. By the same token, the real estate, they still have to pay the real estate taxes on that for a number of years until they get a seller. We also have to recognize that, there's an opportunity to get somebody in there. We also have to recognize what the environment is for real estate, not only that type of real estate, but also in the state of Connecticut. So, there's a lot of things to look at and to consider, and, we're all intelligent people that look at this, and, well, I'll leave myself out, but, we're going to be able to do that. We'll adjust to it. We'll deal with it. Kevin?
Do they, are they still the owner of record of the parcel north of the brook?
In fact, they weren't. I believe, when did they purchase the building? They actually purchased the building from the LLC years ago.
No, because the sale leaseback came to its use.
But there's 40 acres of
I
land.
structured that whole
Yeah, but they are. Yeah, and that came up.
The other 40 acres has been on the market and is still on the market.
Yeah.
My only point was that the development potential and the grand list potential of that 40 acres is perhaps greater developed new
Right.
than the old building is in its present state, which arguably suffers some size obsolescence and some functional obsolescence.
Correct.
So the only point I was going to make is that to the extent that the town can be a partner in encouraging a productive and economic use of the north parcel, that
would be great.
Absolutely.
that's got a lot more
And we did
potential
provide,
appeal.
we did run a list of all these
Mr. North
things.
should be on your committee.
Well, two things. One,
I know.
I'm glad you opened your mouth.
well, number one,
Wait till it leaves and then
that is an opportunity. We have offered that, and we did offer a number of things going back as far as March. So I'm confident they know what we can do. Two, I am putting together an advisory committee. We will work with the Board of Finance to make sure it's got representation from the Board of Finance and the Board of Selectmen and the Economic Development Commission. So we'll, if you have an interest in serving, I'd like to
If we could
get a couple members.
encourage them in their sales effort to bifurcate the sale into two pieces, one the undeveloped land and the other the building,
They already indicated they are doing that.
that would be, I think, a
They've
better
agreed to
economic
do that
outcome
today.
for both of us.
Yeah.
I
And they
think
did,
that's,
I think Nick asked that question today. whether those will be packaged, and they said they're selling both separately.
Good.
Yeah.
I guess, as Paul pointed out too, I look at what they were paying in personal property taxes several years ago. I thought it was like 1.2 or 1.3, and with
It was over 2 at one point.
Yeah, we lost about $1 million over the last 5 years.
There's a lot of personal property that's not in that building, and in particular, the IT equipment that they used to have there.
Right.
Yeah, no, it's incredible.
Exactly.
So this could really be an opportunity to get a business into that wants to invest in.
Jackson Labs look nice there, wouldn't it?
It would look nice.
Not if it's going to cost us $5 million to get them here.
Presupposing you want to have 20 million mice in town. Because that's all they do.
Better than 20,000.
But you have to understand, we also
No,
have some good economic
literally
development
breed
projects
mice
on the
with
horizon.
specific genetic
And
lines.
they are approved projects moving forward. The Dorset Crossing is one. The Big Y, the grocery store is another. So we do have some, we are getting we're getting people coming into Simsbury, which is a good sign for us.
Yeah. Okay, unless anybody has anything else to add.
Well, just one last thing on this. I mean, they indicated they'd be putting out an RFP to select a broker in the next, 2 weeks or so, and they're hoping to have the building on the market by mid-April. And they must have emphasized over and over again that their plan is to be out of the building within 2 years. I mean, that was clearly what they had indicated.
Yep. Okay, last item on our agenda is the approve the minutes of our January 17th meeting. I'll take a motion.
So moved.
Any changes, corrections, additions, deletions?
I had one question. On page 5, the last paragraph in section 7 there.
Thank you, Mary. We'll talk tomorrow.
Should the number at the end of that first line be 7.75, or should it be 7.00?
What page you on?
Page 5.
It should be 775, because they're supposed to assume that, and we'll absorb the
Okay, I
3.8
just
point.
wasn't sure if the language made that really clear that that's what we were doing.
Yeah, I think it did.
Okay.
Okay. Did you have one, Jeff?
No.
I have a couple.
Seconded.
Barb, go ahead.
Page 5, first full paragraph, I don't know, maybe it's the second paragraph. The second sentence, decisions should be singular, and the third sentence, Mr. Askham said he instead of she. And the last motion made by Mr. Blumenthal, section 10, it was a motion to authorize the transfer, and we're missing notation of the second and the approval by the board. So it needs
Sorry,
to,
Robert, can you go through the last two again?
yeah, on the page, and number 10.
Yeah.
On the third motion made by Mr. Blumenthal, you just need to add the word to authorize the transfer of funds, so add the word to. And then it needs a second sentence, the motion was seconded by somebody who's missing, and it was approved, I assume, but that sentence is missing.
Yeah, okay, I don't know how that happened.
Okay, that's it.
Okay, all those in favor say aye.
With the revisions.
With the revisions?
Aye.
Aye. Any opposed? Okay.
Abstain.
We got 2 items. First,
Leslie.
no, I want to just mention that Colleen O'Connor, the tax collector, provided a memo that I had requested that said the collection rate through February 1st is 97.66. Through February 2012, it was 97.35. So it's pretty much on track for what we typically consider, and by the end of the year, it'll be 99.4, 99.5, somewhere around there, right?
Okay, I gotta go to work.
The great.
I gotta go make some calls. She gotta make some calls. I got to do a Jeopardy collection.
Not to put too much pressure on you, but we need it. So, okay, and Burke, you had an item?
My comment was about the minutes, actually.
Oh, you did? Well, why didn't you say something?
He was
I was trying to raise your hand.
On page 2, there's a paragraph down that starts with page 50. And it says, it's talking about what I said in the third line. Basically, they made assumptions based on when people if we could just point out that that is the actuary's made assumption, just
Okay.
kind of reads
Oh,
like
yeah.
the Board of
Okay.
Ed's doing something. And we're
Yeah.
assuming. Thanks.
I think we're okay.
Yeah.
It wasn't material. I mean, it was important, but not material.
Clarify.
Okay, if there's no other business, I will take a motion to adjourn.
Second.
All those in favor, say aye.
Aye.
All right, we are adjourned. Thank you, everybody.
Question.